To keep yourself updated, subscribe to Indigo Learn and click the bell icon.
Alright, so now friends, we will take one detailed example and try understanding the process which happens through this, right, from primary recording till the financial statements, and in that I will show you what kind of mistakes can come and how examiner can question us. Now friends, let us just look at this cash book. As you know, here we are talking about inflows and here we are talking about outflows. Right. Now, concentrate carefully. What are the kind of errors which can happen at this stage? Let's think about those. When something is being written in inflow side, maybe we forgot to write that. That is a possible problem. Or something is written on inflow side, we got cash, we are writing that amount, so it could be capital inflow, it could be cash sales where the money is coming in, or we sold an asset and we are receiving cash. So amount we are receiving, and when we are receiving that amount, we are writing that amount at a wrong value. Is that possible? Well, remotely possible. Then it's also possible that probably we are not writing it at all. We are not writing it at all. So one is making a mistake of writing a wrong number. The other one is not writing it at all. Well, the other possibility is maybe you are writing something which is received, probably should have been written here, you are writing in some other book. Maybe it shouldn't have gone into some other book, but you are writing there. So it should have principally been written here, but you are writing it somewhere else. That is also possible. You recorded, but recorded it somewhere else wrongly. That is also possible. So friends, that way mistakes can be of many types. Now, maybe you recorded it correctly. After writing all the inflows, all the outflows, you arrived at 100 rupees. Closing balance of cash, what we have? Closing balance of cash, 100 rupees. Now, this closing balance of cash, maybe while arriving at this total, you would have made a mistake. Is it possible? Yes, possible. So, mistake in that sense can happen at many stages. Now, closing balance of cash, correctly you calculated it to be 100. But this 100, when you were preparing trial balance, you made a note of this as 1000. This 100 suddenly became 1000. Is that also possible? Possible. So friends, there is no end to the number of mistakes which are possible. So what we will do is, we will classify these mistakes into first two broad categories, and then we will further break them down into a few more categories to understand the real logic as to how mistakes could be made, and then we will talk about how to start rectifying them. Friends, these errors, now we will broadly categorize them into two. The first one we will call as principal errors. Principal errors. And the second category, which is basically a bundle, we will call this as clerical errors. Okay. Now, what is the meaning of principal errors? I am not going into definitions. First, I am making you familiar with the meanings. That is when you will actually apply them more logically. Principal errors means basically conceptual errors. Principal errors basically refers to you should have done something in the accounting, that accounting principle you violated, accounting logic you violated. So that is what you mean by principal errors. Let me give an example. There is a bad debt which you want to record. When you have to record bad debt, maybe the accountant wrongly accounted as if you are creating a provision for bad debt. So bad debt writing off is different from provision for bad debt. So you giving this treatment for that is basically a principal error. Similarly, there is an expenditure which you are incurring towards rent. Now that rent expenditure should have normally been a revenue item, but that the company treated, the accountant wrote that as if it is a capital expenditure. So as if some asset is being purchased. So that again is a principal error. Or maybe it's the other way around. You incurred some expenditure towards travel when you are purchasing a fixed asset. That ideally should be added to the asset cost, right? But that is not added to the asset cost. It is charged off. It is charged off to P&L. So all the costs which are related to the assets have to go into the asset cost. but that wrongly went into P&L account. So that again is a principal error. So friends, for convenience, just remember this. Principal errors are the errors which are made when GAAP, generally accepted accounting principles are violated, right? So you are deviating the accounting principles. Now come to clerical errors. Now clerical errors basically are because of mistakes which are done in the execution of accounting responsibility. So it is not about knowledge. Please understand, this principal errors could be about knowledge. Oh, I didn't know that. Probably that's also one reason why principal errors can happen. But when it comes to these clerical errors, these are very clearly slips on the part of the accountant. These are clearly mistakes on the part of accountant. Now please understand friends, if there is something which has to be written which is not written, that's a problem. So we call it as error of omission. So something which should have been recorded is not recorded, error of omission. Then error of commission. What is error of commission? Something is recorded but it is recorded wrongly. Please understand, something which should have been recorded is not recorded is error of omission. But something which is recorded, it should have been recorded at 100 rupees, but it got recorded at 1000 rupees, or it got recorded at 10 rupees. So that is an error of commission. Now it also is, it also has a spectrum where you may say, oh, one part is missed out, the other part is not missed out. One portion is wrongly accounted, other portion is correctly accounted. So we will come up with different variants of those, but broadly I am saying error of omission, error of commission, and then we will call the other category as compensating errors. Now friends, please don't be of an impression that the moment there is a mistake, balance sheet doesn't tally. No, that's not always necessary. Remove all the items from balance sheet. Will balance sheet tally? Yeah, 0, balance sheet tallied. Remove, say, 1 crore items from asset side, 1 crore items from liability side. Will balance sheet still tally? Yes, it will tally. So please understand, errors might be such that you may not get to see them on the face of it because probably they were missed out, or probably they were accounted. They were accounted or missed out in such a way that the balance sheet, trial balance, let me see, if the trial balance tallies, ideally balance sheet also should tally, right? So the trial balance is tallying. So you can't figure out that there is a problem. So actually you want to ideally put that into another categorization where these errors could be compensating in nature, where you don't get to identify them, you don't get to spot them by looking at the trial balance or balance sheet. So that is one other category which is called as compensating errors. Okay, now let us spend time to understand these things more detailedly, particularly as to how questions get tested and how you have to approach them in the examinations. Alright, so now let us just spend a little more time on principal errors by taking a few examples. Now concentrate carefully, you can pretty much get a question from what we are discussing based on these kind of scenarios. There is a company in which the accountant has recorded repairs and maintenance as capital expenditure. Repairs and maintenance as capital expenditure. Okay. Now, is this enough for you to say that it is a principal error? No, this information is not enough. Why? You should know that repairs and maintenance was actually revenue in nature and it was wrongly capitalized. It was wrongly capitalized. You should know that because repairs and maintenance can either be capital in nature or revenue in nature depending on. So I want you to remember this, because in this rectification of errors, one of the important things that you have to bear in mind is, what if there is no error? So examiner also does this kind of trick. Maybe there is no error, examiner says, come on, rectify, tell me is there any problem, rectify this, and examiner has given these kind of questions in the past where there was no error and the student was asked to see if there was an error and the student was asked to rectify, and people will be like, so because it is a question from rectification of errors, kuch to hoga yaar isme. So that kind of mindset shouldn't be the case, right? So here what I'm saying is, there is a question where repairs and maintenance appear. Repairs and maintenance got capitalized, they got capitalized. So you should check, are those repairs and maintenance expenditures revenue in nature which got capitalized? Okay, now anyway, so if it is a short question which is more to do with a 1 mark or an objective type question, you wouldn't have an elaborate discussion on that. Only if it is a question where you are asked to write the journal entries, then you have to care more about it. Okay, now come back to it. So the company kind of wrongly capitalized repairs and maintenance which are revenue in nature. That is the problem. Okay. What should have happened with the repairs and maintenance? They should have been charged off to P&L. Acha, charged off to P&L means what? Concentrate carefully, friends. Now, let us look at balance sheet P&L and then you will understand what is this principal error, what are these errors of omission, etc. There is P&L and there is balance sheet. P&L has some items on the debit side of P&L, right? And some items on the credit side. Now, I would still talk about P&L with debit and credit side so that you understand the logic. Even though for companies, you will present P&L in a vertical format without any debit and credit side. Okay, right. So, debit side of P&L normally has all the expenditures, losses. These are the items which go into debit side of P&L. What type of expenditures? Revenue expenditures go into the debit side of P&L. Losses go into the debit side of P&L. Then what comes into the credit side of P&L? You will have incomes and gains on the credit side of P&L. Is that clear? Right. Come to balance sheet. You already have basic understanding of this, but quick recap. For balance sheet, what do you have? On equity and liability side of balance sheet, you will have shareholders funds like share capital, P&L, reserves and surplus what we have, etc. We have on the equity side. That is, then below that you will have liabilities. You will have all sorts of liabilities over there. Then on the other side you will have assets. Fine. Now friends, you know very well, the moment I say there is a debit balance, what is the meaning of debit balance? Debit balance means that must be an item which should go either into debit side of P&L, or it should go into assets, or it should be subtracted from the incomes or from equity and liabilities. I am repeating. Principally, if something has debit balance, what should happen to that item? That item should appear in the expenses or losses side, that is debit side of P&L, or it should appear in the assets, or it should be subtracted from the other side. So, it should logically appear there, or it will be subtracted from the other side. Fine. Now, just keep this point in mind because I will keep coming back to this logic a lot of times when we are doing the rectification of errors. Similarly, the account which has credit balance will appear in the income side, that is credit side of P&L, or it will appear under equity and liability side, or maybe it will be shown as a reduction from the other side. Other side means maybe it is shown as a reduction from some expenses and losses, or it is shown as a reduction from some asset. So that is what will happen with a credit item. Is that point agreeable? Right. Now, here, the item which is relating to repairs and maintenance, it is an expenditure. Expenditure means it should be debited, right? So, repairs and maintenance account debited. Fine. To repairs and maintenance account debited to cash or bank. So, we paid that amount and that is the journal entry what we have passed. If that repairs and maintenance actually goes into fixed assets, so you should have said fixed asset account debited to repairs and maintenance. If it is an item which is relating to fixed asset, next entry should be fixed asset account debited to repairs and maintenance. Now friends, what was the first entry? First entry I said repairs and maintenance to cash, correct? Now the next entry, if that item should have gone into fixed asset, that next entry should have been fixed asset to repairs and maintenance. If repairs and maintenance are of capital nature, you should have transferred it to fixed asset. If repairs and maintenance are of revenue nature, then what would you do? Normally, most of the repairs and maintenance are generally of revenue nature. So, what would you do with those? You will transfer them to profit and loss account. So, when you transfer them to profit and loss account, what would the entry be? If you just have to pass a journal entry at the end of the year, you might say P&L account debited to repairs and maintenance. So friends, something which should have gone into P&L maybe came into fixed asset and it is sitting in the balance sheet. So that kind of a mistake is a principal error. So in accounting, you probably accounted debit or credit to a wrong account. So such cases we talk about under principal errors. I hope we are clear about the discussion around principal errors. You can take many more examples, but the logic is same. There is an accounting principle which is violated. That is why we are calling it as principal error. Now come to the other category, clerical errors, errors of omission. Errors of omission, sales we made, we did not record. Purchases we made, we did not record. Or some amount we received but we did not record. So things like that which have occurred, transactions which occurred. Please understand, when I talk about errors of omission, here transactions only I am referring to. Transactions occurred but not recorded. When I say errors of omission, occurred but not recorded in the books. So which books am I referring to? They are not recorded in the primary reporting books. What are the primary reporting books? We spoke about it. Subsidiary books or journal. So they were not recorded earlier. Very good. Now, if they were not recorded earlier, will we say once we make a mistake in life, we will just justify that forever and we will not rectify it? Is that the correct approach in life? No. So if there is a mistake that we ever made and if you realize that that was a mistake, it is important for you as a human being, forget about you as an accountant, it is important for you as a human being to quickly get back and correct it on the earliest date. The same thing applies with you even if you are an accountant, that's all. So here there is a mistake that you made, you forgot to record something, now you came to know about it, what should you do? Immediately rectify that. So you have to find a way to rectify that. How to pass rectification entry I will talk about. Similarly, there is a sales return which has happened. Sales return was not recorded. What do you call it? It is a clerical error which is of error of omission nature. I hope you are understanding what you mean by error of omission. Omit means ignore or forgot. So by mistake you forgot, error of omission, by mistake you forgot that. Okay, right. So now you have to rectify that. Now error of commission. What is error of commission? Friends, error of commission means it comes from commit. Commission comes from committing. Error on account of we committing something wrong. So error here, that commission here amount is, you should have recorded it at 100, you recorded it at 10. You should have recorded it at 100, you recorded it at 1000. So the amount at which it was recorded is erroneous. So you committed a mistake by recording it. Such errors we will call as errors of commission. Friends, when I talk about errors of commission, one other point I want you to bear in mind. It is not that everybody will record every transaction accurately, but at any stage of primary recording, please understand, error of commission also is at the point of primary recording only. We know what we mean by primary recording. In those 7 books, subsidiary books, or in that journal entry, somewhere we made a mistake of writing something wrongly, recording that at a wrong value. That is why it is becoming an error of commission. So then we will understand what do we do with these errors, how do we rectify these errors and things like that. And well, compensating errors I spoke about briefly. I will come back to compensating errors as we start solving more problems. Now friends, here say let us talk about a cash book, inflows, outflows. Okay. Now the important point what you have to note is here if you write to capital because money is coming in, to something like cash sales, then some debtor gave money to X to Y and so on. So all these points you have written, and when it comes to outflows, say you have written by rent, by purchases, of course cash purchases, by salary, etc. Okay, you have written all these items. Now actually in real life, will these items require a corresponding effect in the books? When you are talking about primary recording, Well, as I already discussed with you, so these items get recorded. Now when these are getting recorded, you don't necessarily have to focus on the other side. The other side automatically gets taken care. That is, the double entry effect will automatically get considered when you are doing the accounting. But here, when I say to capital, here the capital I wrote as 10,000. But actually capital was 1 lakh. I wrote it as 10,000. What kind of an error is this? This is an error of commission. This is an error of commission. Then something like there was one more debtor to Z. This amount we never wrote. We never recorded this item at all. Then that is an error of omission. Then I already spoke with you about these principal errors. So friends, this way you can identify based on the kind of problem whether it is principal error or error of commission or omission, etc. Now, this is academic. What is really required for you to solve problems? For you to solve problems, if you know that it is an error, it is sufficient. Because once you know that it is an error, whether it is error of omission or commission or whatever it be, I know it is an error. Now I want to know exactly what was done, how it should have been done, and how do we fix it. So in examination, don't get stuck at this point of or analyzing what kind of errors they are, unless the question is only about identify the kind of error. So if the question says in cash book, this item of collection from a debtor Z was not recorded, what kind of an error is this? If that's the kind of question, that is when you have to identify whether it is an error of commission or omission, etc. Otherwise, you will have to simply understand that it is an error and then move on into rectifying that. Okay, now the next point what I want to talk about is regarding these purchases books. So as I mentioned, these purchases books, sales books, what you have, these are not ledgers, these are books. So simply you may have purchased from P, purchased from Q, purchased from R, like this you may have amounts. Now, the question may say that the total of all these was wrongly posted. So, was wrongly taken somewhere else. So, the total may be 100, 120 and 150. It should have been 370. But maybe we wrongly recorded this as 330. We don't know why we wrongly recorded that as 330. We forgot to do the calculation properly. We recorded it as 330. So in such case, this 370 should have been recorded, but 330 was recorded. So is this an error? Yes, it is clearly an error. Is it an error of principle? Definitely not. So this is just a clerical error. Correct or not? This is a clerical error. So what is the clerical error here? Is it omitted? No, it was done, but it was a commission. It was a mistake that we have committed. So error of commission. So here we should have recorded 370, but we recorded 330. So that kind of a clerical fix would have impact on the ledger postings what we would have probably done. So that is when you would say, oh, because the total of purchases maybe you have posted, and which in turn will go into the trial balance. So that you want to make sure you are correcting. So friends, please identify the errors can happen in this manner also, totaling level errors, or sometimes, of course, these days the problem of this happening is lesser in real life. Page totals. Page totals means in this page you have only these two parties and this party you have in the next page. So these two total you should have made as 220, but you made as 200. So page totals also could be one kind of error. So carry forward errors, then this kind of totaling errors, all these you may get to see. Now friends, let us understand one integration of all these small topics what we discussed till now regarding different subsidiary books and journals. Now here is the cash book. Okay. What I want you to understand is the company does not maintain something called as cash book separately and cash ledger separately. Cash book itself is essentially prepared in the form of a cash ledger. So what do you have in cash book? You have inflows and outflows. So cash book is prepared practically in such a way that serves as a cash ledger. I want you to remember this. So a lot of times cash book serves the purpose of a cash ledger. Right, move on. Then after cash book, say there is sales. Now I already told you in primary recording, this sales book is not a sales ledger. Sales book simply has details of credit sales, what the company has done. So if it has done cash sales, it will simply go into cash book. So it will not come into sales book. Okay, so sales book you have, sales returns, I will not repeat those points, sales returns, purchases book. Okay, purchases book, again only credit purchases. Then you have purchase returns, bills receivable book. All these are not ledgers, books. Then bills payable book. Alright. So simply somebody gave us bill, we'll record that. To somebody we gave bill, we will record that. So we'll just write the party name and amount, and maybe in the bracket we can even write the due date, etc., and we will record that. Fine. Now from here, look at how the game is moving forward. In cash book, you would have written different items. Maybe capital came in, maybe cash sales, right? Then here purchases, salaries, rent, like this you made different payments. Then sales book, maybe you wrote party names, you sold on credit basis to X, you sold on credit basis to Y. In sales returns, maybe X returned something. Purchases book, you purchased something on credit basis from P, Q, R, like this you are writing that. Maybe you returned something to Q, something got returned to Q. Then bills receivable, maybe there is a bill that you received from one party to whom you made a sale, maybe X. So X gave you a bill. Bills payable, maybe you gave a bill to R. Like this I have just written all this. From this you will identify and decide what all ledgers need to be prepared. Friends, this logic is important when you are doing rectification of errors. So here you need to identify what all items appeared here, for which you need to prepare a ledger account. So what all items require ledger account? Do you need a cash ledger again? No, you don't require a cash ledger. You require a ledger for capital account. Separate capital account will be prepared. Then for cash sales you might prepare one account. Purchases, do you need a purchase account? Yes, don't say no. Purchases, you earlier just prepared a book where you captured the summary of those purchases. Now you prepare a purchases ledger. Then you require a sales ledger, you require a rent ledger, you require salaries ledger, and so on. Similarly, all these items, purchases, purchase return, sales, bills receivable, bills payable, for all these items we require separate ledger accounts. Similarly, even for parties, X requires a separate ledger, Y requires a separate ledger. Here you have all these parties. Party wise, whatever you saw in this, you need to prepare a separate ledger. Okay, that is fine. Now the point is, how do things go from here into that ledger, and what kind of possible mistakes can happen? Now please concentrate carefully. Here, capital. There is something that you recorded in the cash book. 1 lakh rupees of capital is brought by the promoter of the company, and that 1 lakh rupees of capital you have earlier recorded only in the cash book. Now you are opening a capital account. When you are opening a capital account, how do you record that? When amount is coming in, you are debiting to the cash account. In capital account, what do? You are expected to credit it to capital account, right? Now, what is the error? Instead of crediting to capital account, maybe it is credited to some creditor account. Wrong, that is not the way it should be done. It was credited to some debtor account. Wrong, that is not the way it should be done. Those become principal errors. Are you following that? Then, this was credited to capital account only. The amount of capital brought in was 1 lakh, but it was credited to capital account as 10,000. That is an error. What error is that? That is an error of commission. Are you following that? Then there is an item of cash sales. Fine, you opened a cash sales account. Now into cash sales account, what will happen? This should get credited. It is not credited to cash sales account. Maybe it is credited to some debtor account. Principal error. Are you understanding that? So something should have been debited or credited to one account, but that hasn't happened. Some wrong treatment happened. So into some other account that got debited or credited. Then we are actually saying, oh, principally I think some logic went missing. So you are trying to identify that and bring that as an error. If that amount is wrong, we are calling it as an error of commission. Well, there is a total of sales book. When I say sales book here, I am talking about credit sales. There is a total in the sales book. So imagine the total of sales book, what you have here, X plus Y, whatever you sold, is some 200 rupees. This total of sales book will go into the credit of sales ledger. If I make a mistake in the totaling, that is an error which needs to be rectified, because what will happen? If I make a mistake here, please concentrate carefully. X 100, Y 100. Okay, total 200. Let me slightly change it. X 100, Y 100, total 200. This is the correct thing that I should have recorded. Into X books, I actually said, yes, we made a sale of 100 rupees to X. So, X is a debtor, and please understand what I am doing here. X, Y, and there is sales account. Okay. Now, X 100, Y debited 100. So these are debits and credits. Okay. X 100 we have debited, and we said to sales we have debited 100. Y also we debited 100. But when we were writing in the sales account, this 200 we wrongly recorded as 2000. This 200 we wrongly recorded as 2000. So we credited 2000 to sales account. Now tell me friends, if this happens, will trial balance tally? No, trial balance will not tally. Forget all other items. Imagine this is the only thing that you have. If X account has 100 rupees debited, Y account has 100 rupees debited, and there is sales which is getting credited to the extent of 2000, it makes no sense, right? So the trial balance will not tally. So this will not be a compensating error. What will happen is, this will show up when you actually prepare the trial balance, and you will say, oh, I think I made a mistake somewhere. I need to come back and identify where it is. So in one way, these kind of mistakes, which are purely clerical in nature, these are a little easier to identify because these seem very apparent, these seem glaringly wrong, and it is easy to come back and fix them. So friends, I hope you understood. So these kind of mistakes also may happen. Now you may wonder, sir, we are doing chartered accountancy. How can there be mistakes like this? Listen, you are a chartered accountant. You are not the one who might be maintaining all the primary recording of transactions. Where will the primary recording come from? Primary recording may come from invoice. It may come from cash memo. It may come from the actual sales transaction, sales invoice, purchase records, what you have. From this you would have actually done the recording. Who would do the recording in the company? Maybe there is a junior accountant who would have passed those journal entries, and you must be the finance controller or finance manager or somebody who is overseeing the work of these people. Maybe they made a mistake and it came to you as, how do I fix this? So in such case, how do you understand the way in which you have to approach this particular error that the accountant has committed? So for that, friends, my suggestion is, first see whether it is an error of omission or error of commission, or under which category it is coming into. Once you conclude there is an error, the next step what I am going to talk about will help you resolve those errors and rectify them in the proper manner. So here, if there is an posting level issue, then there is a problem. Now imagine if the sale what we made to Y, this sale what we made to Y was not recorded at all. 100 rupees not recorded at all. Then what will happen? 100 rupees of credit sale we made to Y, that was not recorded at all. In the sales book, Y is not seen at all. Y is not seen at all. Then will the trial balance tally? Yes, it will tally, because the total will just be 100 and that will be from X, and the trial balance will tally. Just because trial balance tallied, balance sheet tallied, will we celebrate and saying, oh wonderful, we tallied the balance sheet? Friends, please understand, ultimately accuracy is much beyond just a tallying of trial balance and balance sheet. So in this rectification of errors, we are trying to understand how these important aspects need to be fixed. Friends, now we will just see a summary of all these different types of errors. So I told you that one category is errors of principle and the other one is clerical errors. Under clerical errors, we saw error of omission, error of commission and compensating errors. Under error of omission, if the entry is completely missed in the subsidiary books, then the trial balance will still tally, because maybe that entry was never recorded at all at any place. But the other category is maybe it is recorded somewhere in the subsidiary books, but in the posting into ledger it went missing. In such cases, trial balance will not tally. We saw this example where we spoke about X and Y and things like that. So this example we already discussed, how one side it is tally, one side it is posted, but the other side is not, right? Then when it comes to errors of commission, it can be writing wrong amount in the subsidiary books. If you are writing wrong amount in the subsidiary books, will trial balance tally? Yes, it will tally. Then the other case could be wrong casting in the subsidiary books. So 100 plus 100 you wrote as 200. Then in such case, will the trial balance tally? No, trial balance will not tally. Then posting the wrong amount in ledger. So 100 rupees is there as salaries, but you recorded in the ledger or you posted into ledger as 120. Will the trial balance tally? No. Then posting an amount on wrong side. Salaries, maybe you should have debited, but now you have credited. So if you give a wrong effect, again trial balance will not tally. And wrong balancing of the account. So you arrived at the balancing figure in the ledger account and you got a wrong balancing figure in the ledger account. You made a mistake in the calculation. In such cases, trial balance will not tally. Friends, now we are going to look at a few cases as to how you carry out these rectifications. Let us, for instance, talk about purchases book, let us say. In purchases book, X, Y. So basically credit purchase from X, credit purchase from Y. 100, 110. You wrote this total as 200. This is at what stage? At the primary recording stage. Then from here it went into ledgers. It went into ledger of X and ledger of Y. And also you would have prepared obviously something called as purchases account. Alright. This 100 will go into the credit of X account, right? Because X is a creditor in our books. X credited with 100. Similarly, Y credited with 110. You would have written by purchases, you would have written 100 in X and 110 in Y. Now in purchases book, you wouldn't look at the individual balances, you will take the total, and the total normally goes into the purchases book. So to total purchases, from X and Y, 200. Okay. Now the problem is this is wrong. You can't transfer at 200, it should have been 210. So you want to add that 10. When you add that 10, basically purchase account is what should be debited to the extent of 10. Why? It was earlier undercast. Now you are correctly bringing it. Now you may wonder, sir, what is this? When you are passing a journal entry, don't you think you would have correctly accounted this item as a credit item in X, and similarly it would have been accounted as a credit item in Y, and same amount 100 plus 110 should have ideally come into purchases account. Don't you think you would have done that? Might be your question. Friends, theoretically you probably may feel so, but practically what happens is companies prepare purchase books. In purchase books, it will just be like a list. Okay, we sold on credit basis, list out. X, we sold 100. Y, we sold 110. So they'll just write down like this. And only journal entries which don't come into any of the 7 subsidiary books will go into the journal entries. So considering that, purchases total is what will go into purchases book. So as I told you, cash, you don't prepare a separate cash account. Cash book and cash account more or less look alike. So here purchases account needs to be increased to the extent of 10 in our example, because purchases are undercast. Undercast means totaling was done to lesser extent. Overcast means, so the same thing if I say instead of 200, it was earlier written as 220 and say 220 came here, then what does it mean? Purchases are overcast. If they are overcast, what do? You will subtract 10, that's all. So you will subtract 10 to make it a correct amount. So undercast, overcast, how to adjust is what you just now understood. So friends, here basically what we have done in that earlier adjustment is, in the purchases, when purchases were undercast, you added something on the debit side of purchases account. So when you are writing something on the debit side, I can simply say to undercast of purchases, to undercast of purchases. So please understand, I am adding something on the debit side. So I am writing on the debit side, to undercast of purchases. Right, now move on. The logic what you use for purchases is very similar to what you use even for sales returns. Sales returns are also called as returns inwards. I am repeating, sales returns are called as returns inwards. So if the question says returns inwards undercast by 500, what do then? Returns inward undercast means similar thing. Again, you have to write on the debit side of return inward account, and that will be written as to undercast in returns inward rectified. So think about it. When you purchase, goods come in. When you sell, goods go out. When purchase returns happen, goods go out. Correct or not? When purchase returns happen, goods go out. When sales return happen, goods come in. So when rectifications happen, you can just, it's common sense, right? So the treatment what you generally give for sales and purchase returns will be similar, and the other category will be the treatment what you give for purchases and sales returns will be similar. Friends, if the company has to record purchase of machinery, amount is paid to purchase machinery, where will that go? You are purchasing, right? So amount is being paid. Will you say it will come into purchases account? No, it will not come into purchases account, because into purchases account, purchase of your regular goods which you deal with in your business, only those goods will come. So machinery purchase will not come into purchases account, right? Then if you have paid money, then it would have come into cash book. Agreed or not? So it will not come into purchase book, but it would have gone into cash book. Now, if there is depreciation, concentrate carefully. If there is depreciation, what is the entry? Will that go into cash book? No, depreciation will not go into cash book. Will it go into purchases, sales, purchase returns, sales returns, bills receivable, bills payable, any of these? No, you can't route depreciation through any of these accounts. That is why for depreciation you have to pass a journal entry. So wherever you can't write anything in the 7 books, that is when you will talk about passing a journal entry. Friends, now I can say that we are actually starting our rectification of errors, and the level of comprehensiveness with which we will understand this, I can tell you, after we complete our learning, any problem of examination that is asked has to be from one of the topics what we learned. So comprehensively we will discuss the principles, right? Please be with me as we are talking about it. Right. Now, first, what is the way in which you have to think about journal entries? How should you pass journal entries? What are the things you have to bear in mind when you are passing the journal entries? Right. Listen carefully. I'll explain this once again. Because if this principle is clear, your job will be super straightforward. This is P&L balance sheet. Debit, credit. Equity and liabilities, assets. Okay. Now, here you will have expenses and losses. Here you will have incomes and gains. Here you will have equity, liabilities. Here you have assets. Alright. Now, friends, if there is any increase which happens here, what will be done to that account? Decrease that happens, what will be done? This much we will discuss. If there is any expenditure which is increasing, you will debit expenditure. Clear? If I debit, it means expenditure is increasing or loss is increasing. Chartered accountants, be sure about this. Then, if I am subtracting, or if that expenditure is reducing or loss is reducing, then we will credit. Then similarly, income or gain is increasing further, we will credit it. It is decreasing, we will debit it. Clear? Then equity or liabilities are increasing. If they are increasing, we will credit. If they are decreasing, we will debit. Clear? Then assets. If assets are increasing, we will debit. If assets are decreasing, we will credit. Friends, this is the basic principle you have to bear in mind. Now, let us look at what kind of rectifications we are supposed to do. Now, let us take one example. Say, A Limited purchased machinery for rupees 100 from X and recognized it as purchases. This is what has happened. Alright, this is a question given to you in exam, say 2 marks bit. This is given to you. You are asked to pass the rectification entry if required. Okay, then how will you go about with this? So now let me divide the page into 3 parts. Okay, wrong, correct, rectify. Okay, 3 aspects. What is the wrong entry? First of all, whatever was done, is it wrong or not also we should see. If the company purchased machinery, not debited to an item of P&L, it should be debited to asset account. Instead of debiting to asset, they debited to purchases. Okay, right. Now, what is the wrong treatment? Friends, the wrong treatment was something like this. There was this purchases account and there was this X account. X is a creditor. Okay, X account was credited with 100 and purchases account was debited with 100. Naturally, what is that we would have written? 2X, and here we would have written by purchases. Agreed? This is what actually happened. But what do you think should have ideally happened? Ideally, the treatment should have been machinery, fixed asset, 2X, 100. Agreed? Then X account, creditor. In this, we should have written by machinery 100. This is what we should have done ideally, but we made a wrong entry. Then how do we rectify it is the question. Friends, are you clear about it? So there is a ledger, we wrongly accounted for it. So purchases we debited and we credited creditor. Okay, now how do we rectify it? So friends, listen carefully. I am writing purchases, I am writing machinery and also writing X account. We will see, just this is all for a logical understanding. In purchases account, already you have from here 100 which was debited, right? 100 was debited, but that is wrong. What do I do now? I need to credit it. So I will now credit 100 to it. Just hold on, I will credit 100 to it. Then machinery. Machinery, correctly speaking, should have been debited with 100. But was anything done? No, it was not debited. Now we should debit machinery with 100. We should debit machinery with 100. Correctly speaking, machinery should have been debited with 100. So now I am saying we should debit machinery with 100. Then come to X, actually should have been credited with 100. Even now you see it is actually credited with 100. So I don't think there is anything to be done through X account, because whatever should have happened as an effect has happened, but just that it shouldn't be recorded as by purchases 100. It should be by machinery 100. Friends, I am repeating. In X it should not be by purchases 100. In X it should just be by machinery. 100 amount is correct only, but the particulars or narration what you are writing or the description what you are writing, the description has to change, right? So amount wise there is no problem with X account, because 100 should have been credited, 100 is credited, we will change the description suitably. So friends, look at the overall treatment. What are the two things that are changing? These are the two things that are changing. You want to credit something to purchases and you want to debit that to machinery account. That we will call as rectification entry. Friends, how do we pass that entry? Machinery account debited with 100 to purchases 100. That's all. Machinery account debited 100 to purchases 100, being rectification of error caused by debiting. Machinery purchase to purchases account. That's all. Friends, this is how you are supposed to present it. Now what I will do is I will take quite a few case studies and I will run this exercise of wrong entry, right entry and rectification entry. Let us do that. Now let us look at the next example. Rupees 200 received from debtor A, recorded as received from B. So debtor A gave money, we wrote as if debtor B gave money. Okay, right. So again, let us apply. What is the wrong entry? What is the correct entry? What is the rectification entry? What is the wrong entry? We wrote as if. So entry I am just showing in the ledger directly. So there was B account and cash account. What is the wrong entry? We wrote as if we received from B. When you receive money from that person is a debtor. The debtor balance will come down because money is received. So you actually wrote as if B gave money. So 200. And here also 200. You received money, right? 200. But actually this is wrong. You shouldn't have recorded like this. Actually you received the 200 from A. So correct entry would have been, if you have A and cash, you should have written 200 here, 200 here. So that is what you should have ideally written. But you wrongly recorded it. What is the rectification then? So when you look at everything, A, B and cash. 200 should have been debited in cash. 200 is debited in cash. So this is fine. There is nothing to worry. Just that you have to change the description that it is not received from B, it is received from A. Only in the description you have to change. Then what about A and B? You received, you don't have anything recorded here. Now you have to write. Okay. This has to come in. But when you look at B, already you wrote as if something has come. But this is wrong. So because this is wrong, you have to now correspondingly write something on the debit side of that account to neutralize it. Agreed or not? So in A, earlier there was nothing. Now you are writing something on the credit side to make sure that effect is given. And for B, you wrongly credited B. So now you are making sure you are debiting B. So what is the effect, friends? You are debiting B and crediting A. Okay. Now the same thing, let me discuss with you in journal entries. Whatever I am just showing here, we can talk about this even as journal entries. So what is wrong, what is correct, and what is the rectification to be made. What is the wrong entry that we passed? Cash account debited. Okay, cash account debited 200 to B account 200. This is what we wrote. But actually who gave that money? Debtor A gave that money. Correct entry should have been cash account debited 200 to A 200. That would have been the right entry. But we passed some other entry. Now look at this. Debit effect is okay. Debit effect is okay. But credit effect is where the problem is. The problem is this should be reversed. This should be reversed means what should I do? B account debited 200. Wrongly it was credited. Now we are reversing it. B account debited 200. 2. This should have been done, but this was not done. Now do it. A account 200. So friends, what should have been credited? This should have been credited, right? So that is what we now made sure is credited. Same effect you gave even in the earlier discussion. So here what did you do? You debited B and credited A. So by doing this, you are able to achieve that objective. You debited B and credited A. Friends, I hope you are clear about how we are doing the rectification. Now let us look at one more adjustment. A Limited sold furniture worth rupees 200 to B Limited. The same was recorded as sales. That's what has happened. Same was recorded as sales. Okay. Now look at this. What should have happened ideally? Furniture was sold, so furniture should go out. So before we actually talk about journal entries, this is P&L, this is balance sheet. What should have happened? There is furniture. Furniture should go out. Furniture should go out means furniture should be credited. That is what we should have done. Then what should be debited? You received amount, say if you received amount, you will debit cash account. Agreed? If you received amount, you will debit cash account. If you have not received amount, there will be receivable. There will be receivable. So received or receivable account will be debited. Agreed or not? So you will debit received or receivable, that is cash or receivable account, and you will credit furniture account. That is what ideally should have happened. But what did this company do? This company correctly debited cash or receivable, but instead of crediting furniture, it credited sales. So it added this amount to sales. So here it credited. So that's what has happened. So you understood the problem? Instead of crediting to furniture, it credited to sales. That is what the problem is. Okay, right. Now let us come back to the way in which we have been analyzing it. What is the wrong entry? What is the correct entry? What is the rectification entry? What is the wrong entry that the company passed? Say amount is received, cash account debited 200 to wrong entry what they passed is sales. So they showed as if it is something like sales. But what is the correct entry that the company should have passed? Correct entry is company should have, if amount is received, our company should have written cash account debited 200, but it shouldn't have been credited to sales, it should have been credited to furniture. So now when you are analyzing, you feel that hey, whatever should be debited is debited, no problem. but whatever is credited is wrongly credited. Sales shouldn't have been credited, furniture should have been credited. How do you rectify that? Here you have to rectify that, so you have to credit furniture. Furniture 200. So this is what should come correctly, but this has happened earlier. Let us reverse it. So sales account debited 200. So sales account debited 200 to furniture account 200. Clear? Now let us take one more example. Rupees 5,000 of furniture purchased, treated as purchases. We already solved a problem in similar pattern. Come on, quickly tell me, what is the wrong entry, what is the correct entry, what is the rectification entry? What is the wrong entry? Company purchased furniture, so ideally they should have debited which account? They should have debited furniture account, but this was treated as purchases. So the company debited purchases. Purchases account debited to creditor to the extent of 5,000. But what is the correct entry that the company should have passed? You should not debit purchases, you should debit furniture. Furniture debit 5,000 to creditor 5,000. Then what is the rectification entry? Whatever should have been credited has been credited, but whatever should not be debited is debited. Whatever should be debited is not debited. So the rectification is only with respect to the debit side of things. So what do? Furniture debited 5,000 to purchases 5,000. That's it. So again, for whatever it is worth, let us make sure that we are clear about the logic. P&L balance sheet. What has happened? Purchases have happened. So purchase of what? Purchase of furniture. There is a creditor. Creditor got added. Creditor got added means creditor got credited. Agreed? Then what should have been debited? Furniture should have been debited. Added means debited. But what actually got debited? The company debited this to purchases. So company debited to purchases. What should be credited is credited, no problem. What should be debited is not debited, that is the problem. So what we are simply saying is this should go and this should come. How will that go? By crediting it will go. That's all. So you are debiting the furniture and crediting that to purchases. Now moving on. Repairs of rupees 1,000 wrongly debited to machinery. Now it can be machinery, furniture, plant or building or whatever. So some asset, okay, office equipment, whatever. So it is debited to an asset. The important thing is wrongly it is debited to an asset. Okay, right. Now let us just visualize what would have happened. P&L balance sheet. When you incur some expenditure towards repairs, say cash went out. Cash went out. Cash going out means cash account should be credited. So cash should be credited. No confusion. Okay. So cash has gone out and 1,000 rupees of cash has to be credited. Okay. Now the question is about what should be debited. The company wrongly debited to machinery. So company, what they have done is they said machinery debited means 1,000. So 1,000 of asset of cash reduced, 1,000 of machinery which is an asset increased. That is what the company has done. Now what is that the company should have ideally done? This 100 which went out is not actually a capital item, it is a revenue item. That is why it is given as wrongly debited to machinery. So then what do? ideally it should have been debited here. Debited to what? Debited to expenditures. So it should have been repairs, debited 1000 and cash credited 1000. That should have been the ideal entry. Okay, now concentrate carefully. What should have been credited? Cash should have been credited. Yes. What was credited? Cash was only credited. Is that a wrong thing? No, that is not wrong. Then what should have been debited? Repairs should have been debited. What was debited? Machinery account was debited. Is this a mistake? Yes. So how do you rectify this? Machinery, whatever was wrongly done, you have to rectify. Wrongly, what did you do earlier? You debited. Now you credit machinery. That's all. What should be debited? Repairs account should be debited. So if you talk about the rectification situation for this, wrong entry, correct entry, rectification entry. What is the wrong entry? Wrong entry is, so to cash, this is straightforward, 1000, no problem. Machinery account debited 1000. This is the wrong entry what we passed. What is the correct entry that we should have passed? To cash, this is fine, but we should have debited repairs and maintenance account to the extent of 1000. We should have debited that. We haven't debited that. So this is fine. Now this should be debited. No, that is not done. It should be done. So repairs and maintenance account debited 1000 to whatever was wrongly debited now will be reversed. So to machinery 1000. That's it. So this is how that rectification happens. Now let's take another one. Drawings for personal expenses treated as business expenses, rupees 1000. So some amounts, the proprietor, when I say drawings, mostly proprietors and partners only have these drawings. So something, money which has been used for personal expenses has been shown as if it is incurred for business purpose, so which is wrong. Okay. Now how do we deal with this? Concentrate carefully. Again, P&L balance sheet. Okay. Now if there is any amount drawn, will cash go out? Absolutely. So cash gone out. Cash is credited. Are you clear about this or not? Now come to the other side. Debit. What got debited? Capital got reduced to that extent because that amount was drawn. So when anything gets reduced from capital, it will be debited to capital. See, on equity and liability side, if anything has to be reduced, it should be debited, correct? If something has to be increased, it should be credited. We spoke about this point. So here you have to debit capital and you have to credit cash. That is what should have ideally happened. But what did the person do? They have treated this as business expense. So they did not debit to capital. They instead debited to business expense to the extent of 1000. So you are very clear about it. Credit to cash, is that right? Yes, it's right. Debit should have been to capital account, but debit went to business expenses. Understood the problem? So you should not have treated this as business expense. You should have treated this as capital. So now tell me, earlier it was already debited to business expenses. Now what do? Credit it to reverse it. Then what should I newly debit? Newly debit the capital account, or we call it as drawings account. So of course drawings ultimately will be reduced from capital. So you can simply say, for convenience sake, you can say capital account is debited. So friends, what is the wrong entry, right entry, rectification entry? Wrong entry, correct entry, rectification entry. Wrong entry is to cash 1000, and what was debited? Business expenses 1000. That is wrong. Okay. What is the correct entry? Correct entry is to cash 1000. That is fine. So this is the debit impact, by the way. Okay. But what should have been done? Capital debited 1000. Okay. You can either debit capital account or drawings, because drawings overall will be netted off from capital account. Okay. This should have been the correct entry. Now what is the rectification entry? Cash, this side is clear, straightforward, correctly done. The mistake is only with respect to the amounts which were debited. So already something was wrongly debited. Now we have to reverse it. So we will reverse it by crediting it. And this should have been debited. It was not debited. Now we will debit it. So capital account debited 1000 to business expense account 1000. That's it. So this is how you are basically doing the rectification for this case. Now look at another scenario. Rupees 1000 rent paid, debited to landlord. Okay. What is the meaning of this? You paid rent. Okay. So that amount has been debited to landlord account. To understand what this is, again our simple logic, let us open P&L balance sheet. We'll understand it clearly. Cash went out means credited. Cash went out, so cash got credited. So this is straightforward. Cash has to go out and cash got credited. Now what should have been debited? Rent expenditure should have been debited, no? See, think about it. Rent expenditure should be debited. So strictly speaking, rent expenditure debited to the extent of 1000. That is what should have happened. But rent expenditure was not debited. What did this entity do? They debited owner account. Owner account, if you debit something like a debtor, you debited. Just imagine for a moment. There is no balance currently. You are debiting to that account. If you debit, suddenly it becomes something like a receivable account. So when I give 1000 rupees to my house owner, does it mean that 1000 rupees that house owner owes me? No. I owe that person, I paid that. It is not that I paid 1000 rupees and tell my house owner, hey, come on, next month you have to pay me 1000. No, that's not the meaning of that, right? So we are paying that, it is not an asset. So think about it. When money is going out, ask yourself this question. By this money going out, are we creating an asset or are we using that money to pay off a business expense, or are we using that money for settling any loss? Like that you have to think about why that money is going out. So in this case, that money going out is not for the purpose of you getting a new asset. You are basically paying your expenditure, correct or not? So considering that, rent expenditure should be debited. So but what did the company do? They said landlord account they debited to the extent of 1000. So that's the problem. Landlord account got debited, which is wrong. If it is wrong, what should be done? Now you have to credit it. Okay, that is the correct treatment. And what should be debited? Rent expenditure should be debited. Okay, now what is the wrong entry? See, to cash, that is straightforward, 1000. What got debited? Landlord account debited 1000. That is the wrong entry. What is the correct entry? To cash is okay. The debit should have been to rent expenditure debited 1000. That should have been the correct entry. Now what is the rectification? This whatever should have been debited but was not debited, now you will debit. So rectification, rent expenditure debit 1000 to, that should not have been debited, that was debited, now you will rectify it. So to landlord account 1000. So friends, by doing this, you are making sure this particular item is rectified. Now look at one more interesting case. Salary of rupees 5,000 paid to an employee, debited to employee's account. You need to understand the logic. That is when it makes more sense. Now salary of 5,000 paid. Okay, again let us just draw P&L balance sheet to make an analysis. Cash of 5,000 went out, right? So salary paid. So cash or bank of 5,000 went out. So cash account is credited. No doubt about this. Now which account was debited is the question. Friends, cash went out. Ask yourself this question whenever you see something like this. By cash going out, did we create an asset or did we make sure that we paid off an expenditure? Now tell me, did you actually create an asset? Now you may ask me, sir, how are you asking this question? Yes, I gave cash as loan to you. I gave cash as loan to you. You have to give that money back to me. So that amount will come back to me. I am sure about it. And because of that, I will record that amount as an asset. I will not record that as an expenditure. I will record it as an asset. Record it where? I would have said, loan given 5,000. But tell me, is this loan given? No, it's not loan given. What is this? Salary. Company paid salary but recorded as if loan was given to this particular employee. See friends, unless the loan was given, there is no reason why that employee's personal account would have been debited. Are you following that? So, if you are debiting the personal account of employee, it means that employee will have a debit balance. If that employee has a debit balance, that balance will come into balance sheet. Balance sheet as what? As a receivable. Receivable means what? You are treating that amount of 5,000 as if that amount is recoverable. I pay an employee salary and will I tell my employee that amount is recoverable? Nonsense. Understood? So, that amount, whatever is paid as salary, is an expenditure. So, it shouldn't have been debited to loan given. It should have been debited to salary expenditure 5,000. So, the debit impact should have come as salary expenditure. So, you are incurring an expenditure, you are not creating an asset. Are you clear about this point, friends? So, considering this logic, what should have been debited? This should have been debited. What is debited? This is debited. Loan given is debited. Okay, so this is wrong. So, now we need to credit this. That's all. So, to rectify it, we need to credit this and debit will go where? Salary expenditure. Come on, let us plot all the entries now. Wrong entry, correct entry, rectification. What is the wrong entry? Cash has gone out. No confusion about that to the extent of 5,000. But which one was debited? Employees personal account. Debited 5,000. That is the mistake what we have done. Okay, right. It's as if it is recoverable from employee. That is what we have done by debiting employee. Now, what is the correct entry? It is not recoverable from employee. So, it should have been salary expense debited 5,000 to cash 5,000. Acha. This would have been the correct entry. Now, what is the rectification entry? Salary debited to, this was wrongly debited. Now it will be credited. Employee. So, employee amount of 5,000 you will credit. So, earlier it was debited, now to reverse it you will credit it. Understood? Let's look at another scenario. Rupees 1,000 paid to creditor A shown as paid to creditor B. Okay. So 1000 rupees we paid. When you say you paid 1000, again let's come back. P&L balance sheet. Okay. 1000 rupees paid. Cash. 1000 rupees gone. So credit. Straightforward. Now 1000 rupees paid. When you paid 1000, correspondingly, which liability you wanted to settle? You wanted to settle A. Actually, you wanted to pay this off to A, and you actually paid it off to A. So, but what did you record it as? You recorded it as if it was paid to B. So this is correct, this is wrong. You shouldn't have recorded it as if you paid to B, because that amount was paid to A. Now, what is the rectification? When you say some amount of creditor is reduced. Creditor increased means creditor will be credited. Creditor decreased means creditor will be debited. So debit effect is where the mistake is. Debit effect is where the mistake is. Credit side is correctly done. Only debit side we made a mistake. Come on. Again, wrong entry. So 1000 of cash paid. B account to be debited to the extent of 1000. But we should have recorded this as A account debited 1000 to cash 1000. And what is the rectification? This side is straightforward. A account debited 1000, and this is wrongly done. So now you have to rectify it. B account to B account 1000. So basically A account debited 1000 to B account to rectify this. Now come on, let's look at one more example. Rupees 5000 paid for a printer. Printer, when I am talking about a computer printer, okay, debited to travel account. Debited to travel account. Okay, right. Now, P&L balance sheet. What is the account which should be credited? Cash went out. Cash should be credited. No confusion. Now, cash went out. So, that amount of 5000 should go out from cash. Correspondingly, what happened? So, we paid cash. By paying cash, did we get an asset? Is the question. By paying cash, yes, in this case we got an asset. What is the asset we got? The asset that we got is that of a printer. So we got a printer as asset. So ideally we should have written fixed asset printer account to the extent of 5000 we should have debited. Agreed or not? That would have been the correct entry, but we didn't do that. What did we do? We actually considered that as a debit to travel expenditure. I don't know out of where we recorded that. So, travel expenses debited 5000 we wrote. Acha. So, credit impact is fine, but debit impact came to travel expenditure. So, debit impact, if it has gone to travel expenditure, is this right? No, this is not right. What is right? This is right. Understood? So this is wrong. So what should we do? Credit this and debit this. So now let us come back to our wrong entry, correct entry, rectification entry. To cash. What was wrongly debited? Travel expenditure debited 5000. Then what is the correct entry? To cash is okay, but we should have debited fixed asset 5000. That is what should have been done, but that was not done. So credit side is okay. Now debit side only problem. Debit side, fixed asset account debited 5000. So straight away this we are writing because this we haven't recorded earlier, and travel expenditure 5000 to travel expenditure 5000. So we are basically crediting this and debiting this. That's it.